Why is Opendoor stock suddenly pumping again? I've just put together this slide presentation and I have the sources, the articles that I've used to put it together. So I hope you find it interesting. And I said the sources I've used are at the end and you can check them out. And I'll also talk you through how the stock has performed from its all-time highs to how it's doing currently. Slide presentation. So the stock moved higher on early turnaround signals, improving operational efficiency and a shift towards lower risk business model. This is how the stock is doing at the moment. It's trading at just $5. And when you see at its peak, I have it here, all-time highs, it was trading at over $27 a share, and that was in early 2021. So the past 5 days, however, that's why there's a lot of talk about this stock at the moment. It's been up 14%. The past month, it's been down, however, 21%. Past 6 months, up 55%, and year to date, 14%. So very choppy to invest in it. There's a lot of volatility, as I've shown you here. So be extremely careful. So why the stock popped? Revenue beat analysts' expectations, faster home sales, improving cash flow, less capital tied up in housing inventory, and early margin improvement signs. Now, these are just improvement signs you have to note. So operational improvements, reduce housing inventory on balance sheet, selling homes more quickly, improving profit margins on newer home purchases, and new home purchase cohorts performing even better. Revenue versus profitability. Revenue exceeded expectations. Company, however, is still reporting large losses. Short-term revenue expected to decline and scaling down inventory to improve long-term margins. And the leadership impact. CEO focusing on operational efficiency, reduced average home holding time, fewer homes unsold for over 120 days, and execution showing signs of improvement. Risks, however, still remain. Business not yet profitable. Turnaround may take time. Housing market conditions still uncertain, and profitability path may not be linear. So the market takeaway, rally driven by turnaround narrative, margin improvement potential, operational efficiency gains, not driven by profitability yet. That's the key thing. It's not driven by profitability yet. So these are the sources I have used. So Yahoo Finance, Market Watch, and Opendoor earnings release company guidance. So if you like this video, please hit the like button and please subscribe to Invest with Declan. Also, I have up-to-date articles, videos and audio on my Patreon, and you can check that out. It's the first link in the description if you feel like joining. Thanks. I hope you enjoyed the slide presentation. I used to enjoy putting these together, so I thought why not start doing them on my YouTube channel as well. Okay, enjoy the rest of your day. Take care. Bye-bye.